Snapchat stock took a nosedive of 25% after reporting their earnings earlier today, and a lot of investors in Snapchat stock are feeling the pain here on this big move down. But that's not all. If you own other stocks like Facebook or Twitter, for example, you're feeling some pain as well. Facebook here is down around 6% after hours as well, and Twitter is down around 6% also after hours. And while I personally don't own any Snapchat stock, I do own shares in Facebook and I do own shares in Twitter, and I made videos on these two stocks recently, so it is relevant for me here to talk about this on the channel. So guys, if you appreciate this video, hit the thumbs up. It helps me out a ton and it lets me know, hey Nick, create more videos like this because we enjoy it. Okay, so first off, let's look at Snapchat's earnings here because that's kind of what started all of this. Snap actually had a good quarter. They beat on EPS handsomely, but it did miss here on revenue. The most important metric though for these social media companies is that daily active user count, and they beat nicely on this. So what's the deal with this nosedive sell-off? Well guys, guidance. I always come back to this. Guidance is important as well because that's kind of the forward-looking metric that people look at. And their guidance for Q4 disappointed. Snapchat came in with a $1.16 to $1.2 billion of revenue expected for Q4 versus what analysts were expecting of $1.36 billion. That is a substantial miss, a miss of nearly 15%. So guys, the stock is being punished accordingly on this. But I think, seeing this guidance miss is one thing. What's more important is for us to understand why the guidance missed so badly. Why did they come in so low? And that's the real cause of all of this sell-off. For Snapchat specifically, their CEO warned that they're having issues with global supply chain interruptions and labor shortages as well, which reduces the short-term appetite to generate additional customer demand through advertising. So essentially, from what I gather, what they're saying is because of all these issues out there in the world, supply chain, all that kind of stuff, advertisers are less inclined to advertise because they don't have the products in hand to sell their customers, so they're kind of holding back. So in my opinion, this is a short-term issue. Supply chain is kind of affecting most of the industry here, and it's going to affect advertisers, especially ones that sell physical products. But eventually over time, these things will stabilize and that revenue will come back. But regardless, this is just one issue that they brought up, which I can see a point of. But what's more important, guys, is the bigger issue at hand. Apple, that is the name of the company that's causing a lot of this chaos. In a quote, the CEO of Snapchat said that while they expect some business to get impacted from Apple's new changes with their iPhone and privacy policies, they didn't think it would impact the company this much, and this has materially affected their earnings going forward. Now this is big, and this is the exact reason why Facebook, Twitter, Google, Pinterest, and other companies that rely heavily on revenue from advertising, they're all down after hours. If a Snapchat here was down 25% and we didn't really see much of a move from Facebook and Twitter, and well, especially Facebook because it's such a large company, we saw that move only like 0.5%, 1%, something like that. Yeah, we could attribute this to a Snapchat specific issue, but it looks like investors are seeing past this and they're thinking, this is a bigger issue than just Snapchat. It's going to affect the whole industry. The changes that Apple has made here with their iPhones and privacy will have an impact on these other businesses. There's no question about it. Now, here's the question we got to ask ourselves as investors. Will this impact from Apple be something that's long-lasting, permanent, that'll, hamper these businesses and they're not going to be able to grow as much anymore? Or is this kind of just short term and these companies will adapt and revenue will come back over time, earnings will come back over time, and they will bounce back over time? That's kind of where your judgment has to come into play. Personally, if you're asking my opinion, I believe it is an overreaction. I think investors saw a miss on guidance. They saw the Apple concerns and they're like, I'm out, and a whole bunch of money was dumped here after hours. But we'll wait for the earnings call for Snapchat to see if there's some, saving grace here for this company, and if the CEO can kind of calm things down and get these companies back to a slow recovery back up. That being said though, I do think the market had underestimated the impact here from these changes from Apple. So there will be kind of a re-rating of all these stocks, and analysts are going to go out there and kind of figure out the new price targets and all that. So we will probably see some revisions down in the coming weeks. But remember guys, this is short-term thinking. short-term mindset. Analysts only look at companies for the next few months, maybe the next year. So if you are someone like me who's looking at businesses for many, many years to come, this is just a buying opportunity in good companies. Snapchat here lowered their revenue guidance by 15%, but the stock was down 25%. So, something doesn't add up there. Investors, I guess, got really fearful, probably triggered a whole bunch of stop losses and all that kind of stuff. So it sold off more than it should. And what you got to remember is that we're currently entering the seasonally strongest time here for advertising, and I think these companies are probably going to set themselves up to beat their numbers quite nicely next quarter. This is probably the best thing that could happen here for long-term investors, because now the expectation is so low that the stocks are down, you can buy in at a cheaper price, and then come Q1 next year when they report Q4 numbers from this year, they have a chance to beat bigly, and that could send these stocks back to all-time highs, gap up, make new highs, and make us a ton of money as well. I don't think that we're going to see a speedy recovery per se here in the next few weeks and months. I mean, unless all investors are thinking here like me, I think there's a really good chance that we kind of just, move sideways for a little while, maybe a little lower in all of these names, Facebook, Twitter, Snapchat, they could all probably move sideways. Unless next week Facebook comes out, Twitter comes out, and they weren't really affected too much by it. Then we can say, okay, this was a Snapchat specific issue. They got to deal with it themselves. But if Facebook and Twitter just kind of echo and reiterate what Snapchat said here today, it's going to take a little while to get things back on track and get these stocks moving higher again. That being said, guys, these are all still great businesses, and I still like what I see. Now, personally, am I making any moves here? No, I'm not, and I actually think that Facebook may actually see even more selling in the coming weeks. I talked about this in the previous video. Not really buying in just yet. I'm waiting for prices around 280, 290. That's when I'd probably buy some more. Twitter, if we get into like the mid 50s, I'll probably buy a little bit there as well. Next week, regardless, is going to be very interesting for these two companies as they report. So I'll kind of just keep my cash on the sidelines for now while I wait for that. Anyways, guys, let me know in the comments, did you pick up any of these shares here after hours? Are you bullish, bearish on these companies going forward? Do you agree with my analysis here and my sentiment for these stocks going forward as well? Love to hear your thoughts in the comments down below. But either way, thank you so much for watching. Don't forget to invest positively, and I'll see you in the next one. Peace.